How we'd invest $1,000 in the stock market. Smart strategies for growth. If I handed you $1,000 right now and said, invest this in the stock market, what would you do? Would you pick hot tech stocks, chase crypto, or maybe play it safe with index funds? In today's video, I'll show you exactly how Investment IQ Insights would invest $1,000 right now, with a strategy that balances growth, safety, and long-term wealth. Welcome back to Investment IQ Insights, the channel where we simplify investing so you can grow smarter and build real wealth. If that sounds like something you're into, tap that subscribe button and turn on notifications so you never miss out. Please remember that this video is for educational purposes only. Always do your own research or consult with a licensed financial advisor before making any investment decisions. Let's get one thing straight. $1,000 won't make you rich overnight, but it can be the start of something powerful if you invest it wisely. We don't believe in gambling or hype-driven plays. We believe in buying great businesses, holding long-term, and letting compound interest do the heavy lifting. All right, let's dive into the first bucket. Your core foundation. This is where you're going to allocate $500, and it's all about building a rock-solid base for your portfolio. Think of this as your financial fortress, designed to weather any market storm. Now you could spend hours researching individual stocks, trying to pick the winners and avoid the losers. But honestly, for most people, that's a recipe for stress and potentially some costly mistakes. That's why we're going with a simpler, more effective approach, low-cost, diversified index funds. Specifically, we're talking about ETFs like Vanguard's S&P 500 ETF, VOO, or the Vanguard Total Stock Market ETF, VTI. These funds give you instant ownership in hundreds of top companies that form the backbone of the American economy. We're talking about giants like Apple, Microsoft, Amazon, and more, all in one shot. The beauty of these ETFs is their simplicity. You're not betting on a single company. You're investing in the overall growth of the market. And historically, the market has always gone up over the long term. Plus, these ETFs come with super low fees, meaning more of your money stays working for you. Remember, when it comes to investing, every dollar counts. Over time, those small fees can add up to a significant chunk of your potential returns. With a core foundation built on index funds, you're not just investing in stocks, you're investing in the resilience and growth potential of the entire market. This is how you build a portfolio that can stand the test of time. Now that we've got our solid foundation in place, it's time to shift gears and inject some serious growth potential into our portfolio. This is where our growth engine comes in. And for this, we're allocating $300. Now, instead of broad market exposure, we're going to handpick 2 to 3 individual stocks of companies that we believe have a bright future ahead of them. We're talking about established companies with a proven track record of success, strong earnings, and a competitive edge that sets them apart. One company that immediately comes to mind is Alphabet, Google, the parent company of Google. They dominate the online advertising space, and their cloud computing platform, Google Cloud, is giving Amazon a run for its money. Plus, they're heavily invested in artificial intelligence, which is only going to become more important in the years to come. Next up, we have NVIDIA. They're the undisputed leader in graphics processing units, or GPUs, which are essential for everything from gaming to data centers to, you guessed it, artificial intelligence. As AI continues to revolutionize industries, NVIDIA is perfectly positioned to capitalize on that growth. And of course, we can't forget about Amazon, AMZN. They've completely transformed e-commerce, and their cloud computing platform, Amazon Web Services, or AWS, is an absolute behemoth. Amazon is a company that consistently innovates and expands into new markets, which makes them a compelling long-term investment. Remember, when choosing your growth stocks, it's crucial to do your research. Look for companies with a strong competitive advantage, a solid management team, and a clear vision for the future. This is not about chasing quick profits or jumping on the latest hype train. This is about investing in companies that you believe in for the long haul, companies that you think will still be thriving 5, 10, even 20 years down the line. All right, we've covered our core foundation and our growth engine. Now let's talk about the final piece of the puzzle, our speculative edge. For this bucket, we're setting aside $200, and it's all about adding a touch of excitement and potential for outsized returns. Now, I want to be clear, this part of the portfolio is not for the faint of heart. This is where we're willing to take on a bit more risk in pursuit of higher potential rewards. Think of it as venturing a bit further out on the risk curve. One way to approach this is by investing in a sector-specific ETF, focusing on an industry that we believe is poised for explosive growth. For example, we could consider an ETF that tracks the performance of companies involved in renewable energy, biotechnology, or artificial intelligence. These are all sectors with massive long-term potential, but they also come with a higher degree of volatility. Another option is to delve into the world of small-cap stocks. These are companies with smaller market capitalizations, which often means they have more room to grow but also tend to be more volatile. If you're willing to put in the time and research, uncovering a hidden gem in the small-cap space can lead to significant returns. One ETF that fits this high-risk, high-reward profile is the ARK Innovation ETF, ticker symbol ARK. This actively managed ETF focuses on disruptive innovation, investing in companies at the forefront of technological advancements like genomics, robotics, and artificial intelligence. While it can be a bumpy ride, the ARK Innovation ETF has the potential to deliver outsized returns over the long term. Remember, this speculative edge bucket is entirely optional. If you're not comfortable with the higher risk, you can always allocate this portion to your core foundation or growth engine. But if you're looking for a way to potentially supercharge your returns, this is where you can let your inner risk taker come out to play. Now here's the real secret. It's not just where you put the money, it's how you manage it. Reinvest your dividends. Don't panic on market dips. Add more when you can. $1,000 today can become $10,000 or more over time with consistent investing and patience. That's the power of compound growth. To recap, we'd put the first $500 into a solid ETF like VOO or VTI, $300 into high-quality growth stocks, and $200 into smart speculative plays. Diversified, balanced, and built for the long haul. So that's exactly how we'd invest $1,000 in today's market. If you enjoyed this breakdown and want to keep building your investment IQ, click on one of the videos now appearing on your screen. Thanks for watching, and remember, smart investing isn't about luck. It's about strategy.